Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. We're going to dive right in, take a look, see what people are sharing. If you want to follow me, it's at Finance. If you want to join our community, finding-value.com. I dive into all of these topics that I just mentioned, looking for potential investment opportunities and sharing those opportunities with everyone in the community and helping them as they go through this commodity bull market. I think one thing that I do very well help people with is being able to hold on to companies while they consolidate sideways. So we still have a coupon code Mayday that is active if you're interested, and we've got a question and answer session that is happening today, Saturday, from 7 a.m. Mountain Time to about 10, 11 a.m. Mountain Time. So we're going to start with Dan here. He says bullish nat gas and coal. Bloomberg NEF also sees massive relative growth of data center electricity demand. Data center demand will take all the wind and solar it can. But absent long-duration multi-day storage send-out capacity, what new sources can provide near-term, next 10 years, 24/7 baseload electricity in scale other than natural gas and coal? So how significant will AI data centers electricity demand be? And then they just throw out this high demand that goes way out there. We also have the middle kind of the data center middle growth projection. And then we've got the buildings, which is the purple, and the electric vehicles that are also coming on. So this is all kind of new sources of electricity demand by sector, and it can get quite jiggy out in the future, which is only a few years away. 2030 is not that long in the future. 2025 is coming up. We got about 5 years to get to 2030, and some of these growth projections are dramatic. It says coal and gas generation will grow to meet the new power demand. No way. Like, I would have never guessed that. I've been saying this for quite a long time. And our investments, in my opinions, reflect that outcome. That I think coal and natural gas will be very good investments for this next 5 to 10 years, and all the demand growth with electricity. Longer term, I do think nuclear is going to find its way into this mix. I think it has to at some point. But right now, I just don't know if they can scale nuclear over the next 5 to 10 years, maybe as much as they wish they could. But I do think coal and natural gas, they're probably going to turn back on nuclear plants. They're probably going to turn back on coal plants in the world, and still run all the natural gas they can feed it. Another one from Dan says bullish natural gas. BHP sees growing energy consumption and electricity share thereof doubling to 40% by 2050. Within that, BHP sees massive relative growth of data centers from 2% of electricity consumption to 9%. Growing data center demand will take all the wind and solar it can, but absent long duration multi day storage send out capacity, what new sources can provide it? And this is what we've got in this article here, Electricity MegaTrend. And it says traditional demand refers to the basic relationship between economic growth, electricity consumption, and copper. And this is electrification, a 20th century megatrend set to continue. And almost all of these countries are moving from the lower left to the upper right. What does that mean? That is your electricity consumption, and it's megawatt hour per capita. So everything is moving to the right, which is GDP per capita. That's the x-axis. And the y-axis is your electrification and energy per capita. So this is all per capita, and it's all moving from the lower left to the upper right. What does that mean? It means that we are consuming way more energy per person in the entire world. Is that good? Yeah, it's good. That's what wealth is. That is the definition of wealth, is being able to consume more energy per capita. What does it mean as an investor? I need to go buy more energy investments. That's more energy, more energy. Um, Here's some more stuff too, just to highlight real quick. It says, as the world seeks to rein in the use of these fuels and the related carbon emissions, it will need more electricity, mainly from renewable sources, to keep everything running. And I don't know, I don't even know. I mean, guys, there's a lot of stuff coming that's going to suck down silver. Silver is a critical element on the periodic table that's going to just absolutely get consumed. I think this is a huge investment for silver. It says under the base case, we see electricity demand roughly doubling from today to 2050, as electricity's share of total energy consumption also doubles to around 40% by 2050. And then today we estimate that the traditional versus energy transition versus digital split of global demand is around 92%, 7%, 1%. By 2050, we predict that split to have evolved to 71, 23, and 6 between that energy, traditional energy and energy transition split. Coming down, let's see what else we've got here. Back up again. Here we go. Gold and the world currency units all-time highs. Guys, look at this thing. That's a massive breakout. So we've got this little consolidation here that occurred from 2021-ish, 2020, 2021, and we squeezed up all the way to 2023, broke out, consolidated, and are just ripping. What does this mean? Why is gold going up? Gold is just 1 ounce, and 1 ounce is 1 ounce. Gold is just gold. It's an element on the periodic table. It is a metal. The reason it's going up is because the currency units are worth less. So when we value whatever it is in currency units, everything's going to look like this eventually. Everything. Unless we can produce it at a faster pace than what they produce currency units. So if it's something in the real world that we use, something that is limited to some degree and we can't really exponentially increase it, it's going to eventually look like this on all the charts. If gold's going up like this in world currency units, eventually oil is going to look like this in world currency units. It just hasn't reached oil yet. And it will. It will. Gold's our leader, and it is pricing it all in. And the global liquidity flows is pricing that in. Breaking, JP Morgan Chase has said the U.S. economy has likely made a soft landing. Does that mean we run? I think it was in the movie was it 2012? I think that was the movie where what's his name? Arnold Schwarzenegger. He was in it, and he was the governor or whatever, and he's like, nobody needs to panic, and he's like, yeah, that's when you panic, is when they tell you not to panic. And then the earthquake hits right at that time. Weekly gold drilling highlights. Gold drilling highlights. Snowline Gold ripping it. And then we've got Free Gold Ventures, Two Door Gold up there, getting some pretty big hits there. And then Dryden Gold and so on. HFI Research, energy stocks lag oil, but not for long. I see some so it says, I see signs from both technicals and fundamentals that suggest to me energy stocks won't be lagging oil much longer. Well, we'll see. They do look pretty good. The energy equities do look good, in my opinion. Coming down, Gary Savage. Let's see what he's got to say. So something in retail traders with portfolios filled with dozens and dozens of mining stocks, sometimes even 100 or more. These people have been scammed by the newsletter touts. Most of these penny stocks will either go out of business or remain stagnant. Many are nothing more than a pump and dump grift. Mining in general is a crappy business. Shares are constantly diluted as they need to bring in a steady stream of money to keep their losing operations going. Dilution is a big reason why GDX is down 40% from its all-time highs despite gold near $2,700. Let me break the news to you. By the time it's all said and done, you will have one or two big winners, a few modest winners, and a lot of losers. Overall, you could have produced the same portfolio results by just buying GDX or GDXJ. One click in, one click out, easy peasy. None of the headaches of trying to manage dozens of positions. Here's another cold hard fact. Silver, by the time we get to the final bubble top, will significantly and probably massively outperform mining stocks. Silver has no management risk. Silver isn't affected by labor strikes or mine floods. Silver can't be embezzled or nationalized. So if you're looking for that big home run hit, just focus on physical silver. Silver is your long-term, life-changing buy and hold investment. Miners are for trading intermediate and daily cycles, and you can make that much simpler by just sticking to the GDX and GDXJ. I doubt there will be a significant difference in percentage gains, so just choose one. Well, that's his opinion. I actually have a few stocks, individual stocks, in fact, in the gold and silver space that are up dramatically. One of them is up well over 100%. Actually, actually, I have a few over 100%. I've got like three or four over 100% now. Some of them are producers. There's a couple producers, and then there's some speculative junior companies that are up over 100% off its bottom. Now, how did I choose those? I use technical analysis to choose them. They're also the ones with the goods in the ground. They're developers. So I do think you can drastically beat it. I'm going to use me as an example. I think we are beating it with the companies that are in my portfolio, but I have hand selected those companies. They weren't just randomly selected. I didn't. They didn't just fall out of the sky. I combed through everything, found them, and I put money in them when they were cheap, when no one was looking before this move. And I think they could do like a from bottom to top a 10x when gold does this big move here that we're doing. We're in the middle of it. So you didn't exactly get the bottom of the bottom, but we're still early in the move. Seth Golden says, boom, that just happened, and it's a rare occurrence. The Dow has advanced roughly 60% of the last 250 trading days. Historically, this proves a perfect foreshadowing of future returns. The index has never been lower 9 to 12 months later when the uptrend has been this strong. Something tells me the S&P 500 holds a likely outcome. Oh, that's the data there if you guys want to know. And it's been higher every single time that this precursor has occurred. It says you guys realize that retail financial advisors put clients in mutual funds and get 1% of AUM, right? Yeah, that just seems absolutely ridiculous. I don't know why people would do that. I don't know why. 1% of your total account balance is a lot of money. And that's why I think doing these like websites and having people learning how to do it themselves are so valuable. For a small price, you can get the same amount of information or probably even more information. Become a better investor, manage your own funds, and skip out on this large 1% fee. 1% is a lot of money if it's of your total portfolio value. I mean, that is a lot of money. Porter Stansberry says, we are about to see the final destruction of the American experiment. Every economist knows this is correct, but nobody is going to tell you about it. I'll summarize it in plain English. We are screwed. Debt is growing much faster than gross domestic product, and interest expense is growing much faster than debt. And the real growth in entitlement spending hasn't even begun yet. Progressive taxation means nobody will ever vote for less spending, and the combined size of government employees and dependents, there's no way for America's actual taxpayers, about 20 million people, to ever win an election. So the spending won't stop growing, and ironically, inflation will make demands for more spending to grow. Inflation undermines both economic growth and social cohesion. The purple hair man women weirdos are only the beginning. What comes next is scapegoating Jews, blacks, immigrants, and huge increase in violence, domestic terror. Get ready, America. This election has nothing to do with what's coming, and neither Trump nor Kamala can stop it. Our experiment in freedom and self-government died in 1971 when all restraint on government spending was abandoned with the gold standard. You can only live at the expense of your neighbor until he runs out of money, and that day is here. That is Porter Stanberry's opinion of what's going on right now. We are screwed. Gold and silver, I think, are smelling that out a little bit, and we are, going a little bit vertical here, Goose, with the gold priced in world currency units. Do you see that? Yeah, we see that. That's kind of what's going on here. The currency is losing value. Investment wisdom, he says, neither Warren nor I have ever thought for 2 seconds about beta, but every business school teaches this. Maybe if we had a few more hundreds of billions of dollars, people would pay attention to us. Charlie Munger. I don't pay attention to beta either, but I'm not saying I'm in the same league as Charlie. Well, maybe I am. Who knows? Maybe I end up like those guys. Why most investors miss the probability of peak oil. So these are the things that he thinks people are missing. Captured IEA, EIA data, underestimate strength of global oil demand. They underestimate global decline curves. There's poor field by field transparency from MENA. There's an overestimation of US shale potential, EV adoption optimism, and deep captured media. That's why people are going to miss peak oil supply. Nostra says rumor that a large silver short is starting to feel the pressure. And you know what? It doesn't matter to me, guys. I don't go off of rumors. I don't care. If the chart looks good, I'm in it. I'm rolling it. If the chart looks like crap and the ratios are expensive, I'm going to pass. It's a hard pass. Another one from Nostra says Warren Buffett dumped half his Apple shares. Now the CEO is dumping too. What do they know? Probably that they're overvalued. And maybe their window of opportunity is coming to an end with the election. Maybe. Centivos bought back 8.6 million shares in September. Wait, in September? Great month given the crude turnaround and Sunrise payment allocation. With ND allocation behind them after quarter three, I'd expect 8 to 12 million a month for the next 15 months at reasonable commodity prices. And this is what's going to occur with a lot of the companies that I really, really like. They are buying back shares and they're going to ramp up their share buyback programs and really funnel money back to the shareholders. Whether that's dividends or share buybacks, I think a lot of companies are first going to do share buybacks. What does that mean? I talk about share buybacks, and I think a lot of people on the website didn't really understand share buybacks. Share buybacks is increased demand for your stock. They are shrinking the share count, which increases their earnings per share and essentially increases your production per share. So everything per share as an investor becomes better. Their earnings per share goes up, their production per share goes up when they buy back shares and eliminate them. And then it increases the demand for their stock, increasing the price to go up. So it's all good things. Tracy says total global oil and product inventories drew by 5.3 million barrels last week. Crude stocks built by 5.5 million barrels, driven by a large build in the US. But refined product stocks drew by almost 11 million barrels, driven by a large draw in the US. And what I want you to do is just look at where we're located on all these charts. Low, low, low on the bottom side. We're low here. We are in the middle of this one here, and we are off the chart low on the bottom here. So these are mainly gasoline stocks, fuel oil, distillate stocks, refined products. Total oil stocks are low, and crude stocks built here, but we're still at a very low level in the U.S. This is the U.S. one here. But we're all on the low end, is what I'm trying to say. Nostra says it currently costs $76,000 on average to mine a Bitcoin, worth only $59,000 and dropping fast. Think about that. Okay, I'm thinking about it. I do want to know if Bitcoin does crash and these costs continue to go up. I don't like, what does that mean? Like, do they stop mining or do they put these big fees to the end user? We'll see. Patrick Karam says home prices aren't expensive. It's your fiat that's become worthless. So this is the amount of fiat required to purchase a single family home. Up, 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 up. This is the amount of gold required to purchase a single family home. Down, 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 down. So it's the currency that's eating it, guys. Everyone else says, oh, home prices are so expensive. Yeah, it's your currency. That's the root cause. World of statistics. So let's look at this. It says, which degrees do the most millionaires have? Engineering, economics, finance, politics, mathematics, computer science, and law. Um, so that's kind of what it is. Why would engineers have a lot, be millionaires? Because they're cheap. Like we're just brainos. And engineers make good money. There's a lot of us, generally male. I believe that it is of engineers, it's about 90% male, a little under 90%. I think 14% are females. Let's say it's 86% male. So it's a bunch of dudes making money, and a lot of us pretty smart, and we just save. We just save a bunch of money. And we can't logically think of ways to spend money and be really, to spend a bunch. So you have an entire group that is saving money, making good money, and probably investing it. And of course, they're going to end up being millionaires. That's just the outcome. Mathematics is more or less engineering, and computer science is a bunch of engineers too. We share a lot of classes with them, growing up. The people who do flunk out of these generally go into economics and finance and politics. I don't know about law. Nobody really went into law that I know of. That's totally in a different path. But yeah, I could easily see that. And no, it does not surprise me. Buy not optimism, but arithmetic. Arithmetic. Is it arithmetic or arithmetic? I don't know. Ben Graham. Everybody wants to hire the best. Nobody wants to pay them the best. that's totally true. That's what I would see. But we hire the best engineers. I'm like, no, you don't. You're not even close. Wild predictions for crude oil. Some analysts think that the oil price could reach more than $300 a barrel in the case of a full blockade of the Gulf of Hormuz. Maybe. Despite the reported build this week, we are still tracking the bottom of the 5-year cloud. There we are at the bottom. An alarming trend is developing in U.S. shale oil production. It says, in my view, this is the most obvious trend that's developing in the U.S. shale oil production, and the disparity will only grow. U.S. shale oil production will only get gassier over time, and with it, U.S. crude production is peaking. Oxy's CEO said that 2025 is the year that oil is going to get in short supply. Speaking of oil, oil to gold ratio looking solid for oil and perhaps a false breakdown. So here's expensive oil, here's cheap oil. We had this consolidation there and it broke out that was the big commodity bull market from 99 to 2008. Boom, boom, boom. If you invested in oil during this period, you had made a buttload of money. Yes, a buttload. What is a buttload? A buttload is a buttload of money. So coming on down, we had a consolidation. 1, 2, 3, three-hump consolidation and a falling wedge. We've broken out of the falling wedge. Your false breakdown was here in 2020. This was the buy of a lifetime. Probably only once in a life could you have purchased oil equities as cheap as they were in 2020. Then we broke out of the falling wedge. We are consolidating back, and we have another false breakdown. This is another buy. This is the second best buy of your lifetime, perhaps. We've got a three-hump consolidation, and then a breakdown, false breakdown, much like this three-hump consolidation we've got here, the false breakdown. So very similar setup that we've got going on, and I think we could potentially head higher where crude oil could outperform gold. Good analysis. Oh, wait, that was me. That's good. Could you have a head and shoulders top on crude oil ratio versus gold? So what I did is I swapped gold to crude oil. So this is crude oil to gold. This is gold to crude oil. And this, to me, looks like a shoulder, a head, and a shoulder. And we're at the top of the right-hand shoulder almost, somewhere very soon. And then we could squeeze back down where crude oil outperforms gold. If you look at this and the other one up here, it's this shoulder, head, shoulder, and we're at the right-hand side of the shoulder here. and that's where we could break up. The neckline is through here if you want to see it. So that's looking at it that way. I just flipped it and put gold to oil ratio. It looks a little bit easier to see. Tavi says, meanwhile, very significant upward revisions in the real GDP forecast for Brazil this last month. They're starting to heat up. I like Brazil. Brazil. JSG says, solid draw for commercial petroleum products. Other oils per latest EIA weekly. The WTI fair value estimate of $84 or $10 undervalued from market price. 6-month low in commercial inventory excluding other oils. We're on the undervalued side right now. So oil's looking pretty good if you look at commercial inventories and the dot plot of historically where those inventories were and what the price was. I don't have a preconceived notion about allocation. I let the opportunity dictate where I end up. Completely agree with that. People have asked me this quite a bit. They said, well, what's your allocation to energy? What's your allocation to precious metals? What's your allocation to fertilizers? And I'm like, guys, I don't do that. I don't have 25, 30, 25. The allocations are going to end up whatever they are based off the opportunities and the money that I have at that time. I don't have a preconceived notion about allocation. I let the opportunity dictate where I end up. That's exactly what I do. Lilu does, well, I do exactly what Lilu does. I didn't knowingly do that, but that's what happens. Porter Stanberry says, okay, and I already read this one, so we're going to end it there. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We've got the question and answer session going on today. If you want to join, Mayday coupon code. Don't forget that coupon code if you want to save money. 50% off the first month and only the first month on the monthly membership. And you can get a bigger discount on the yearly membership. Even if you're already a monthly member, you can go to a yearly membership if you'd like and get that discount if you'd like. Up to you. But that's what I've got for today. We'll catch you next time. This is Finding Value.